Let's get back to building the business to sell. So you said one of the 8 factors is profitability, right? So can you walk us through the different parts of the business that you consult your clients on to make it more sellable? Or kind of,
Sure.
if I walked into your office, what's our first steps, right?
Well,
If
the
this is
first,
our goal.
yeah, the actual first step would be to complete the value builder assessment. And I can give the link to that, but it takes about 13
Yep.
minutes. It asks you questions about your business. You can answer with round numbers, or you can pull out your tax return and give specific numbers. Obviously, specific numbers would be better. And then it gives you kind of some areas of your business that you can improve. And also it gives you a range of what you could expect to sell your business for based on your business type, revenue, things like that. So there are 8 drivers of value, and we could spend hours upon hours. But these are things that if you get them right, they can increase the multiple that your business would sell for. So one of them is the financial performance of a business. So if you think about it this way, if you're buying my business, really what you're buying is what you believe the future cash flows will be. Okay. So
Mm-hmm.
if my business has had $1 million of revenue and $999,000 of expenses, you probably would not pay a lot for that business because, yeah, you could make a few changes, but it's been profiting $1,000 a year. Bad example, but a little bit extreme. If my business has had $1 million, well, let's go to the other end. My business has only had 200,000 of revenue, but let's say the expenses are $50,000. So
Mm-hmm.
a business with much less revenue, but much higher profit, you would arguably pay much more or a higher multiple for that business. Okay. The other thing that could drive up the price of my business would be how defendable are my actual numbers that I'm telling you. So a lot of
Mm-hmm.
small businesses, their bookkeeping is a train wreck. They're paying some personal expenses out of their business account. They haven't reconciled QuickBooks in months and months and months. So part of financial performance is how well the business is doing, but also like how defendable those numbers are. And as businesses get higher in value and higher in revenue, as you get close to wanting to sell your business, having like an actual CPA firm audit your books, which will cost a good little chunk of money. But if I come to you and say, hey, April, here, you and your broker and your business advisors can now examine my audited financial statements, so that they're
Mm-hmm.
true, as opposed to maybe there's a similar business that doesn't have audited financial statements and you're not quite sure if the revenue numbers are accurate. Certainly my business with the audited financial statements would be much more valuable. So financial performance is a huge one, to say the least.